So we have here form of balance sheet, Oberoi Hotel Limited. The date is 31st March 2006. Oberoi Hotel Limited as on 31st March 2006. Figures as on 31st March 2006. Then we have the profit and loss account, similarly, Oberoi Hotel Limited. The moment the word limited is there, you know you have to do it under the company form of organization. The moment two partners, X and Y, A and B, okay, all this is there, then you know it's under partnership. For the year ended 31st March 2006. As on 31st March 2006. Okay, so let's start with the notes. So we have the share capital. Now here there is no way we know the authorized capital. They have not told us anything. Okay, and the authorized capital will never be given to you here. This is always a paid up capital because this is the amount that has been actually collected. Okay, so we won't be able to write the authorized capital here. So it's just the paid up capital that we know. So I will just put it as paid up capital. Issued, we can put it as issued, subscribed, called up, paid up capital. Okay, 4 lakhs. Then we have reserves and surplus. Now under this we have the profit and loss account. We'll have 2 items here, the profit and loss account. And under the profit and loss account, we have the opening balance. Okay. Under the profit and loss account, we have the opening balance, which is given as 38,640. To this, we will have to make various adjustments. We'll have to add the current year's profit or loss, provide for the general reserve, provide for dividend. Okay. Here we will also have reserves under general reserve under this category. So the first thing is profit and loss account. We still don't know that right now there is no general reserve at all. We have to create it. Okay, so when we reach there, we reach the adjustments, we will create the general reserve. Then we have long-term borrowings. We do have an item under this, which is 18% bank loan, 18% bank loan. Now there will be an adjustment to this because if you see here, I've not explained this. Provide for interest on bank loan for 6 months. That means this interest of 6 months has not yet been paid. It's outstanding. Okay, so we have to calculate interest on this. I will come back to this a little later. So the 18% bank loan is right now, it is what we have is 50,000. Okay. Then we have short-term borrowings. There's nothing under this here in this problem. We didn't come across under anything under short-term borrowing, so we don't need that note. Okay, short-term borrowings. We have something under trade payables. That will become note 4 for us. Trade payables, which we have are suppliers. Suppliers are given as 62,220. 62,220. There is no adjustment to this. Okay. Then we have short-term provisions. We do have some here, short-term provisions. This would be note 5. Short-term provisions, right now we don't know what it is. 2 things that will come here is one is provision for income tax and one is proposed dividend. Okay, so we don't know either of this right now, so we will have to keep that blank. And we go to the last one there, which is other current liabilities. Now, other current liabilities in this problem, we do have something. Okay, other current liabilities we do have. So I will have to create a note for that. Note 6, other current liabilities. So we have outstanding wages and outstanding salaries. Outstanding wages and outstanding salaries, which will also be added to wages and salaries in the profit and loss account. So outstanding wages and outstanding salaries are here, 1890 and 1200. Which salaries is 1890. This is 1200 and 1890. So the total of this comes to 3090. 3090. Okay. Next, we come to tangible assets. We have quite a number of assets. Freehold premises 164,210. Restaurant furniture 5,000. Freehold premises, and there's depreciation, so we need to leave space for that also. Freehold premises is 164,210. Okay, I think there is no depreciation on freehold premises. Okay, so this can be written directly 164,210. On the other things, there is furniture is 5,000, and there is depreciation on furniture, I think. Yes, at 10%. Furniture is 5,000. And we also have another one which is kitchen plant. Kitchen plant is 128,400, and there's depreciation on that as well. Kitchen plant 128,400. Okay, there's depreciation, so we'll have to leave a line for this. Next is tangible assets are done. Then we discuss. Let's try to go in order. If you remember, under non-current assets, the first thing is fixed assets. Under fixed assets is tangible assets. Then we have non-current investments. We have long-term loans and advances. We have other non-current assets. Now, under other non-current assets, we will have a note. We have preliminary expenses here. Okay, we have preliminary expenses here. And in this problem, we have something that remains. And the preliminary expenses are, if you check, it's 6,000. There will be an adjustment to this, the part that is written off. Okay. Then we come to the current assets. Non-current assets are done. We come to the current assets. First, we have current investments. We don't have anything here. Then we have inventories. Under inventories, we will have closing stock of provisions. The closing stock given to us is 124,840. 124,840. Then we have trade receivables. We have they've been called as banqueting debtors, 1,05,400. Banqueting debtors, 1,05,400. Okay, inventories, trade receivables. Then we have, which we didn't have in the last problem, so I can't forget that, cash and cash equivalents. So cash and cash equivalents. Then we have short-term loans and advance. Okay, so this is going to be cash and cash equivalents. cash and cash equivalents. We have cash in hand and cash at bank. Cash in hand, and we also have cash at bank, and these two are uh, cash at bank 96,860 and cash in hand is 19,530. 96 cash at bank is 96,860 and cash in hand is 19,530. 19,530. Put this together and we get 1,16,390. 116,390. 116,390. Then we have short-term loans and advances. We have your advance payment of income tax. The last one, 84,290. 84,290. Eighty-four two nine zero, and finally we have other non-current assets. We will have here, I think, linen cutlery. That's what we are going to have. Yeah, linen cutlery. That's it. We'll have depreciation also on this 12,500. Linen cutlery 12,500. Okay, there's going to be depreciation. So we are done with the balance sheet notes. Now we move on to the notes of the profit and loss account. So this becomes note 13 here. Okay. Note 14 will be revenue from operations. And I think we just have one item which is sales. They've directly given 11,69,900. 11,69,900. 11,69,900. Okay. Other income won't be there because we did not come across anything that comes under other income. So I directly go to cost of materials consumed. So here we calculated as opening stock of provisions. Okay. We have purchases. So add purchases. We also have carriage inward here. I told you why we add carriage inward. Okay, it's connected to purchases and less closing stock of provisions. So opening stock of provisions is right in the beginning 186,420. 186,420. Then we have purchases which are 7,18,210. 7,18,210. We also have carriage inward. The carriage inward is 4,910. Just check that. Carriage inward is 4,910 and purchases were 7,18,210 and the closing stock is 124,840. The closing stock is 124,840. 840 and this put together comes to 186,420 plus 718,210 plus 4,910 minus 124,840 comes to 7,84,700. 7,84,700. Okay, next we have employee benefit expenses. So here we have salaries, wages and the outstanding to each of them. Salaries The amount is given as office salaries are 17,870. 17,870. We have to add the outstanding, and we also have wages at the outstanding. Okay. So outstanding salaries we already have somewhere here. Mentioned it here. Yeah. Outstanding salaries is 1890. Outstanding salaries is 1890. Then we have the wages, which are given as 1,12,570. 1,12,570. 1,12,570. And the outstanding wages are 1,200. I think I've got that correct. Outstanding wages are, sorry, I mixed it up. Outstanding wages and outstanding salaries. Anyway, it doesn't make a difference. Okay, I think I'll change it here. Outstanding salaries is 1890. This is 1890. The total anyway will come to the same, and this is 1,200. So this is 1,200, and this is 1890. Okay. So this put together, we will get here 17,870 plus 1,200 will be 19,070, and here we will get 114,460. 114,460, and this put together comes to 1 lakh 14, 20, 1 lakh 24, 1 lakh 34. This comes to 133,530. This comes to 133,530. Okay. Now coming to finance costs, we have here this given some interest on bank loan. Yeah, interest on bank loan 4,500. There will be an adjustment to this. I will come to that when we reach the adjustment. For now, we'll just write it as interest on bank loan 4,500. 4,500. Okay. We also have depreciation and amortization expenses. We have that in the adjustments, so I will come to that when we reach adjustments. And the last thing that we have is other expenses. I think we have some items here. We'll just go to the balances. Sundry expenses 19,240. Sundry expenses 19,240. 19,240. Then we have sundry expenses. Then we have office salaries, directors remuneration 26,250. Directors remuneration 26,250. Then we have directors remuneration. All these things are taken. Carriage and word. Audit fees we will have 8,600. Preliminary expenses only the part that is written off. Okay, so that we'll see when it comes to the adjustments. Audit fees is 8,600 for now. Audit fees are 8,600. We can't total this because we still have to show the preliminary expenses that are written off. Okay. So we'll go to the adjustments now. Outstanding wages, outstanding salaries, I've already taken this. Okay, we've taken it both in, we've shown both the effects. Stock of provisions, now this I'm not shown in inventories. 124,840, I don't think I've shown it. I've already shown it. So that is also done. We have shown it in cost of materials consumed and inventories as well. Then now, provide for interest on bank loan for 6 months. Now, if you just do this calculation, okay, let's look at interest on bank loan. Where is that? Long-term borrowings. If I just look at this calculation, what would be the interest? If I try to calculate the interest, it would be 50,000 into 18%. They have not told us when the loan was taken. So we assume it was taken in probably in the previous years, or it has been taken maybe at the beginning of the year. So basically, I don't have to multiply into 3 by 12 or 6 by 12 because we are assuming it's a loan for the whole year. Now, if you do 50,000 into 18%, you will get 9,000 rupees. You can check that. 50,000 into 18% is basically 9,000 rupees. Now, pay attention here. What has happened is, if you see here, the total interest is 9,000 rupees. Okay, the total interest is 9,000 rupees, but out of 9,000, only 4,500 has been paid. Out of 9,000, only 4,500 has been paid, and that is why they have said provide for interest on bank loan for 6 months. That means interest of 6 months, that is half the interest, another 4,500 is still outstanding. It's still not paid and it's still due. Okay, how did I get how much is that? How much is this interest which is outstanding? You calculate the total interest. It's 18% of the entire amount, 18% of 50,000. Okay, and this is a liability. It didn't strike me to tell you. It is a liability since it's a credit balance. If it was a debit balance, it would have come in long-term loans and advances. Right now, we are taking it under long-term borrowings. Okay, so 18% on 50,000 comes to 9,000 a year, the interest component, out of which only 4,500 has been paid. Where is that? Here. Only 4,500 has been paid. That's why the adjustment has said provide for interest on bank loan for 6 months. Okay, so because of that, what I'm going to do, there is outstanding interest and and outstanding interest, outstanding interest. What I will do, I'll take this calculation here. Put it here. Okay, and what I will multiply here into 6 by 12. And I'll put a small note here. Interest is paid only for 6 months and is outstanding for the remaining 6 months. Interest is paid only for 6 months and is outstanding for the remaining 6 months. Okay, so this is the note for this. So basically 4,500 is still outstanding, which still has to be paid along with the loan, and the total amount here will be 54,500. That's one effect of this, and the second effect will be we have to show it in finance cost. Right now under finance cost, I've just shown interest on of 4,500. To this I have to add outstanding interest. And the outstanding interest is 4,500. So the total comes to 9,000. The total comes to 9,000. Is this clear? Sometimes, always be careful whether you're doing problems of hotels or whether you're doing any other final account problems. Sometimes this adjustment is not even given. But always check for interest on loan, whether the entire amount, because if you have loan and if it has a percentage like this, normally the interest component is mentioned. Always do the calculation and check whether the entire interest is paid. Sometimes we call this hidden adjustments. Even though the adjustment is not mentioned, you still need to calculate it, because if you've taken a loan, you have to pay interest. If you've not paid it, it becomes outstanding. So if a percentage like this is given, always check the interest calculation. Okay, not only for problems like this, for any final account problem. Provide for depreciation on kitchen plant 15%, restaurant furniture 10%. So 15% of furniture, sorry, kitchen plant is 15%. So we have here less depreciation and 15% of that comes to 19,260. 19,260. Okay. This once minus will be, this comes to 1 lakh, 1,09,140. Similarly, furniture, it is 10% less depreciation. 10% of 5,000 will be 500. So this will come to 4,500. So the total of this comes to, the entire tangible total comes to, tangible assets comes to 2,77,850. 2,77,850. Okay. Similarly, we need to write this in the depreciation and amortization. Furniture, it's 500. Kitchen plant, 19,260. Kitchen plant, 19,260. Furniture, 500. And we also have linen, cutlery. They've told us something about linen and cutlery. The new value of linen and cutlery is 10,000. So the depreciation, we'll have to check what is the old value here. Linen and cutlery will be here. The new value is 10,000. So less depreciation would be, if you do depreciation to get 10,000, it would be 2,500. 2,500. Okay. So here we have 2,500. So this entire thing put together would be 19,260 plus 3,000 would be 22,260. 22,260. Okay. And then we have, make a provision for income, write off 1/3 of preliminary expenses. Now write off 1/3 of preliminary expenses. Preliminary expenses right now are 6,000. Okay, less written off 1/3 of 6,000 would be 2,000. 1/3 of 6,000 will be 2,000, and the balance expenses that are left are 4,000. So this 2,000 also comes in other expenses as preliminary expenses written off. The part that is written off. The part that is written off, 2,000. So we can get a total here of this. This will come to 19,240 plus 26,250 plus 10,600 comes to 56,090. 56,090. 56,090. And then the last, there are two adjustments that are left. Make a provision for income tax at 50%. Now, in the previous problem, they had given us the amount of provision. Here, they have not given it to us. Okay, so we will have to wait for the profit to calculate this 50%. And the second one also, directors recommended a maiden dividend at 15% for the year after transfer of 5% of net profit to general reserve. Again, for this one, 5% of net profit to general reserve, we need the net profit. This we can do. Okay, so this I will do. Proposed dividend, 15%. 15% of the share capital, which is 4 lakhs. And proposed dividend will have to be minus from the profit. Okay, right now we don't know the current year's profit, so I will just say less proposed dividend. We have to minus it from here. I don't know it yet. Okay, we have to minus it from the total profit. I don't know the profit yet, so I can just minus this and keep, because I know how much is the dividend. It's 15% of 4 lakhs, which will be 15% into 4 lakhs, which will come to, I think it comes to 60,000. That will come to 60,000. Let's show here. 4 lakhs into 15%. 4 lakhs into 15% comes to 60,000. Similarly, we'll also have to minus the transfer to general reserve. Okay, that we can do only once we get the profit. Secondly, this proposed dividend will also come in short-term provisions along with provision for tax. Proposed dividend will be 60,000 here. Okay. Now we cannot move ahead until we know the profit, and to know the profit we need to start transferring all the items. So we will continue with that.